In the last class, which is the part one of this class, we looked at, preparing receipt and payment account and income and expenditure account. We looked at the similarities between receipt and payment account and income and expenditure account. We looked at, the meaning of not-for-profit making organizations. We also looked at basic terminologies in not-for-profit making organizations. So we're able to explain this in the previous class, which is the part one class. So in this class, which is the part two class, we're going to be looking at how to prepare, the income and expenditure account and the balance sheet for not-for-profit making organization. We're also going to be looking at adjusting for subscriptions, that is subscription in advance and subscription in arrears. We'll also touch prepaid expenses and accrued expenses briefly in the illustration. So here we're looking at final accounts for not-for-profit making organizations. So I already explained in the last class that the accounting activities of not-for-profit making organizations is in agreement with what? The going concern method. That is the same way you prepare accounts for regular or your usual profit-making organizations. The same way you prepare accounts for not-for-profit making organization. But I said the only difference is the terminologies that we use. Certain items are called certain names, in the not-for-profit making organizations. Profit is called surplus. Deficit is what we call loss. So basically, I've explained this in our last class, so you can just go to the last class and refresh your memory before you continue this class. So in the last class, I also explained how to prepare your income and expenditure account. I said that your income and expenditure account is the equivalent of your profit and loss account in the profit-making organization. So basically, what you are trying to achieve here is to know if you've made surplus or you are on what deficit. So what you call profit or loss in profit-making organization, here we call it income and expenditure account. So you're doing the same thing. You're comparing your income for the period against your expenses for the period. So if your income is higher than your expenditure, you have a surplus. But if your income is less than your expenditure, you have a deficit. I've explained this as well in the last class. So you can go to the last class to refresh your memory as well. Again, I'm showing you how it looks like. This was shown in our last class as well, but briefly, you will see that the income and expenditure account is just an account that shows your expenditure against your income. Your expenses in the debit side, your income here is in the credit side. So what are your income? Sales, subscription, donations, depending on the type of not-for-profit making organization. If you are in a church, your donations will be in form of tithes, offerings, pledges. If you're in social clubs, you can have donations too. And then you have subscriptions, In foundations, you have more of donations, So basically what we're saying is that those incomes, you compare them to your expenditures. So at the end of the day, you have a surplus if your income is higher than your expenditure. But if your expenditure is higher than your income, you have a deficit. So alternatively, if you don't want to do all in one account, so you can do it this way. Already we know that we are preparing income and expenditure, which is a comparison of your income with your expenditure. So what you're saying is, what are my incomes and what are my expenditure? Do I have more income and less expenditure, so we have surplus? Or do I have more expenditure and less income, so that there's a deficit? So what we want to know is if there's a deficit or a surplus. So here we just say income and expenditure account for the year ended, whatever year, So you're just saying, what are the incomes? Your note will explain what make up the income. So whatever you have there is what you have here. For instance, your note 1 says incomes here. We have sales, subscription, donation. When you add everything up, that's what you bring here. And then we have expenditures. Note 2 explains what makes up your expenditure. From here, we have salaries, transport, honorarium, payment for printing. When you add all up, you have your expenditure here. So you minus your expenditure from your income to either get a surplus or deficit. So in this illustration, or in this format, we have more incomes than expenditure. So surplus is I minus E. I is the income, E is the expenditure. So basically, you're trying to compare your income here with your expenditure. Your note is what is showing what makes up your income and what makes up your expenditure. I already explained what subscription means in the terminologies in the last class. So basically, I'm going to say that again. So if you are a member of a club or any association, for instance, okay, it is always mandatory for members to pay certain dues. It could be monthly, it could be yearly, depending on the organization, and it's depending on the association or the club. Okay, now that is what we call subscription. The monthly due or the yearly due of members to the club or to the organization is what we call what? Subscriptions. Okay, now we have what we call subscription received in advance. What I'm saying is that the organization or the club or the society or the association, okay, has received subscription for members for a year that is not due. For instance, you are in 2009, or let's say you are in 2010, okay, and you have now received the subscription for 2011, okay. So what I'm saying is you are in 2010, but you have received subscription for 2011, or you are in 2009, but you have received subscription for 2010. The point is that you have received subscription. That's the organization or the club has received subscription for a year that is not due. So this is what we call subscription received in advance. So how do we adjust for subscription received in advance? I already explained that you are receiving what is not due. So technically, the club is owing the members. So remember, when you're owing people, it's a liability. So whenever you have subscription received in advance, okay, in the year of reporting, if there's any subscription received in advance, it is treated as a current liability, okay, because it is not yet time for them to pay, but you have received it from the members. So you are owing the members for a year that is not due. So in the year of reporting, it is a current liability. So it is also possible, okay, that you have what we call subscription received in advance in the previous year ending. Okay, while we have established that the subscription that you record for the income statement in the year of reporting will be net of the one you received in advance. So if, for instance, in a particular year, the total subscription received is 1 million, and they're not saying out of that 1 million, 200,000 is for what? The following year. So that means that the 200,000 is not due for the year you have received it. So what you'll be taking to your income and expenditure is 800,000. Then the 200,000 will be what? A current what? Liability. But it is not possible that you still have some subscription received in a previous year. Okay, in that case, you have to adjust for it by adding it to the subscription received in the current year. So basically, we are still doing the same thing we did in what? In prepayments. So this is like prepaid income. Subscription received in advance like prepaid income. So if you have not checked out the class on prepaid income, please do it. We have a class on prepayment and accruals where we treated prepaid income and prepaid expense. So I explained there how to treat prepaid expenses and prepaid income. So subscription in advance is going to follow the same treatment you have when you are treating prepaid income. So basically, you add any advance, subscription in advance, okay, to the one received during the year, and then you less whatever advance is received for the reporting year, and then add any one that is in advance at the beginning of the year. So here is a simple illustration. They said the following information relates to the subscription of details of what ABC Society of Friends. They're not saying that subscription received during the year 2012 is 2.5 million. Subscription for 2013 amounted to what? 485,000. Remember, you are in 2012, but you have received for 2013. Okay, so this is what subscription advance. Okay, now the subscription in advance as at 2011 ending amounted to what? 295,000. Remember, I told you the end of a previous year is the beginning of the what? The current year. And in prepaid income class, I told you that prepayment at the end of the reporting year is deducted. Prepayment at the beginning of the reporting year is added. So if 2011 is the beginning of 2012, it means that there's subscription in advance for beginning of 2012. And then subscription for 2013 received in 2012 will be the subscription at the end of 2000 and subscription in advance at the end of 2012. So what I'm saying basically is that you have to identify the advance subscription at the beginning of the year and the advance subscription at the end of the year. So from this question, the advance subscription at the beginning of the year is for 2011, because they are saying you are required to show how subscription is to be accounted for, assuming the current year of accounting is 2012. So we are accounting for 2012. So subscription in advance at the beginning of 2012, okay, is what? Is added. Subscription in advance at the end of 2012 is what? Is deducted. So basically we have received 2.5. So because you deduct subscription in advance at the end of the accounting year, okay, so you're going to deduct 485,000. But because you add at the beginning of the year, you're going to add 295,000. And because the accounting year of reporting is 2012, this 485,000 that is received for 2013 will be what? A current liability. Why? Because you have received from members what they are not supposed to have paid you, so you are owing the members. So basically, this is what I'm saying. ABC Society of Friends, subscription accounts. You know, your double entry, when you receive cash, you debit cash and credit the account. So you have received 2.5 million. So you'll be debiting your cash and crediting subscription. So now we have cash received, the subscription credited 2.5 million. So we now have subscription in advance 2013, which is subscription in advance as at the end of 2012. So we have 485,000 we're deducting. Now the one at the beginning of the year 2012, which is the end of 2011, okay, we are adding. That's why you have it in the same place, 2.5. So 295 plus 2.5 will give you 2795. 2795 minus 485, the balancing figure is going to be income and what? Expenditure. So we have income and expenditure extract here. Subscription will be 2,310,000. So by the year 2012 balance sheet, we are still owing members 485,000 because it is paid for 2013 in 2012. So subscription in advance will be what? 485,000. So now we have established subscription in advance as what? Subscription received from members, that are not due to pay. You're taking money that is not supposed to be received. So you are owing the members. But subscription in arrears is now what? Saying that what? You are yet to receive from the members for a period that is what? Due. So it means members are owing the what? The club, or members are owing the association. So when subscriptions are due from members, but members are yet to pay, or the club is yet to receive, you say subscription in what? In arrears. You can say subscription owing, okay? Or subscriptions what? Outstanding. So what do we do in the case of subscription in arrears? It's the same way we treat what? Accruals. So go to the accruals class. We had a class on accrued income and accrued expenses. The same way you treat your accrued income is the same way you treat subscription in what? In arrears. So basically what we're saying is that any accrued subscription or subscription in arrears in the year of reporting is added to the what? To the subscription received for the year. Then anyone that is at the beginning of the current year of reporting is what? Is deducted. So basically what you're saying is that out of the money received for this year, okay, we still have some left that is yet to be received. That is the arrears for the current year. So you add it up to get the amount that will go to income and expenditure. So, but if you have any arrears that has been reported in the previous year, which is the beginning of the current year, you will deduct. So basically, that subscription in arrears for the current year is a what? Is an asset, because now members are the one owing the what? The organization. Now looking at the same example, but we are now twisting it. The previous example we said it was what? Advanced. Now is arrears. So we're saying the following information relates to the subscription details of ABC Society of Friends. Subscription received during the year 2012 is 2,500. Okay. Now I say subscription in arrears as at 2012 ending amounts to what? 485. Subscription in arrears as at 2011 ending amount to what? 295,000. So basically, Subscription in arrears at the end of the current period is 485. At the beginning of the period is 295. And I told you, I said subscription in arrears at the end of the period that we are reporting is added. At the beginning of the period is what? Is deducted. And subscription in arrears for a current period is a current what? Asset. So they say you're required to show how subscriptions account for assuming that the current year of accounting is 2012. So what are we saying? We have AB Society of Friends subscription account. Okay. Remember I said when you receive cash, you debit your cash account and credit the account. So now you're receiving subscription. So you debit cash, credit subscription account. Now you're crediting subscription here, 2,500,000. Then that's in subscription in arrears at 2012. That means subscription at the end of the current year. And I said you should what? You add. So that's why you're adding 485,000 to 2.5. At the beginning of the year, which is the end of the previous year, you deduct. So that's why it's taking what? The debit side here. So when you add this to this minus 295, you have 2,690,000 going to your income and expenditure. So you see it here in the debit side. So we now have subscription, income, and expenditure extract here. 2,690,000. So the subscription in arrears for the year of reporting is a current what? Asset. Why? Because members are owing the what? The society, or members are owing the what? The club. Now, the balance sheet of a not-for-profit making organization is the same thing with what? The profit-making organization. The only difference is that you don't use capital, you use accumulated fund. You don't use owner's equity, you use accumulated fund. You don't use shares, you use accumulated fund. Do you understand? And then your profit is not used as profit, you use surplus. Your loss is not used as loss, you use what? Deficit. So basically, the balance sheet of a not-for-profit making organization is still a statement of what? Financial position. It is showing, okay, the assets of the organization and the liabilities of the what? Of the organization at a particular period of what? Time. Okay, so we prepare it the same way we prepare for what? A regular what? Organization. But we have to take note of the terminologies. We don't use capital, we use accumulated fund. We don't use profit, we use what? Surplus. We don't use loss, we use what? Deficit. Now here's my point. Statement of financial position as at December 2018. You still have your assets, just like the way you have it in your regular balance sheet. Assets, which is non-current asset, note 1. That's the makeup of the non-current assets. So you can see it here, note 1, not current assets. What are they? Motor vehicle, equipment, machinery, office furniture. Okay, your fixed assets. That's your non-current asset here. Current asset, that's number 2. What are the current assets? Your cash in hand, cash at bank, prepaid expenses, accrued incomes, closing inventory, debtors or receivables. Those are your current assets. When you add them up, the total is what you have here as note 2. So your current asset plus your what? Non-current asset gives you your total what? Assets. Here, this plus this is what you bring in here. Then now have your liabilities. Your liabilities are either long-term or short-term. Okay? So what are your liabilities? What are the breakdown? You put the breakdown here. Note 3, long-term liabilities. You have maybe mortgage loan, term loans, and any other arrangement that is what? That is long-term obligation to the what? To the club or to the organization. So the total is what you bring here as long-term liabilities. They will now have short-term liabilities the same way. Creditors, overdraft, prepaid income. That's subscription in advance, for instance. I told you that the way you treat subscription in advance is the same way you treat prepaid incomes. Okay, so you can go back to the prepayment class and the accruals class. So we have all of them there. So when you add all your short-term liabilities, you have it here. Now your owner's equity aspect, you don't use owner's equity, you use accumulated fund. So you have your accumulated fund. Your accumulated fund can what? Change from time to time. If you make enough surplus, it will increase your accumulated fund. If you make deficit, it will reduce your accumulated fund. Just the same way, in a profit organization, if you make more profit, your capital will increase or your owner's equity will increase. If you make losses, your owner's equity will reduce or your capital will reduce. So basically, in this case, we are just comparing our surplus, or we are adding our surplus to our accumulated fund. If it's a deficit, we are deducting it from our accumulated fund. So in this case, we had opening fund here, and then we have surplus. That means there was profit. So when you add it to this, you have that accumulated fund. That is what you're bringing here. So at the end, your total liabilities must be equal to your total assets. So this is an illustration on how to prepare income and expenditure account together with a balance sheet. Okay, here so we say the following trial balance has been extracted from the books of Perfect Brothers Association. So we have the trial balance at 31st December 2009. So we have subscription received 1.8 million, donations 1,365,000, sales of ticket and tags 520,000. We have honorarium 220,000, rent 398, ticket printing 280, traveling and hotels 355, salaries and wages 395, cleaning and other expense 85,000. We have land and building 2,302,000, furniture and fittings 270,000, office equipment 250, debtors 350, creditors 130, bank overdraft 120, cash at bank 100,000, motor vehicle 450, then accumulated fund 1,520,000. So you see your trial balance here agreeing 5455, 5455. Now there's additional information. It says subscription due but yet to be received as at 31st December 2009 is 590,000. This is subscription in arrears at the end of the period, and I already told you or taught you how to treat it. Okay, subscription in arrears at the end of the period is what is added. At the beginning of the period, you subtract. But here, I think in the question is only saying at the end of the period. So you add. We have accrued rents. I already taught us accruals. How do you treat accrued expenses? Okay, accrued expenses at the end of the period you add. At the beginning of the period you deduct. Okay, then there's prepaid printing. I've taught you prepayment. It's the same thing. Prepaid expenses at the end of the period, what do? You deduct. At the beginning of the period you add. But I think in this question it's all at the end of the period adjustments or end of the year adjustments. Okay, so you're taking the only end of the year adjustment step or principle. So basically, if you don't have an idea on how to treat prepayment, accruals, depreciations, please go back to the class. They are all on YouTube. So we have classes on prepayment, classes on accruals, classes on depreciation. I can see provision in this adjustment as well. We have classes on provisions. So you can go there and update your knowledge on that. So basically, we have provision for bad debt to be recognized at 5% of debtors. So let's prepare. We have Perfect Brothers Association. Income and expenditure account at 1st December 2019. I already told you your income and expenditure account is just a comparison of your income with your expenditure. You want to know your surplus or your deficit. If your income is more than your expenditure, you have surplus. If your income is less than your expenditure, you have deficit. So we have income. Note 1 will show us how we got our 4,275,000. So where's our note 1? Look at our note 1 here, income. Subscription, according to the question, is 1.8 million. But there's an additional information. Subscription due but yet to be received. That's subscription in arrears. As at 31st December 2009, that's subscription in arrears at the end of the period is 590,000. So what do you do to subscription in arrears at the end of the period? You add. Okay, and then you now treat this one as as a current asset. Why? Because members are owing the association. So here we say 1,800,000 plus 590,000. That will give us 2,390,000. The next one is donations. Any additional information on donation? No. So pick it straight. Donation is 1,365,000. The next one is sales tickets. Any information on sales ticket? No. So when you add this, and this, you have 4,275,000. That's what you have here. The next one, we have our expenditures. What are our expenditures from the question? The first one here, we have honorarium. Is there an information on honorarium? No. So we pick it straight, 220,000. The next one is rent. Rent here is 398,000, but there's an information. They say accrued rent as at 31st December 2009 is 55,000. And I already told you that accruals at the end of the year is added. Okay, so what is the accrued rent? 55,000. So that will be 398,000 plus 55,000. That's 453,000. Then the 55,000 will be a liability, because you are due to pay the rent, but you are yet to pay it. Okay, so the next one here says ticket printing 280,000. Is there information on ticket printing? Yes. Prepaid printing as at 2009 is 72,000. I already taught us prepaid expenses. You can go back to the class. Prepaid expenses at the end of the period you deduct. At the end of the period you add. So here is just at the end of the period, which is 72,000. So we have ticket printing 280,000 minus 720,000, which is 208,000. This 72,000, remember, is prepayment. We have paid for the expense in advance. So those people are the one owing us. So it becomes a current asset. Okay. So the next one is traveling and hotels. Any information on it? No. You put it there. Next one is what? We have salaries. Any information on that? No. You put it there straight. Then we now have cleaning and other expense. Any information on that? No. You pick it straight and put it there. And then we have depreciation. They say depreciate all assets except land and building at 10%. I taught you depreciation. You can go back to the class to understand depreciation. Depreciation is the reduction in the cost of a fixed asset. That reduction is an expense. We now report the net of the what asset in the balance sheet. So here, what are our assets here? Our assets here, we have land and building, but they say we should not depreciate land and building, so that one remains. We have furniture what and fittings to be what 270,000. So depreciation will be what 10% of 270,000, which is 27,000. The next one is what equipment 250,000. 10% of equipment is 25,000. 10% of 250,000 10% of 250,000 is 25,000. So that's what you have it here. Next one is motor vehicle 450,000. 10% of 450,000 is what 45,000. That's what you have here. Now we have another provision for bad debt to be recognized at 5% of debtors. I have taught us provisions. So I said provision for expenses, okay, is a function of what? Increase or decrease. You compare provision at the beginning of the period with provision at the end of the period. So if you're making provision for bad debt is an expense. So provision at the beginning of the period with the one at the end of the period is what will tell you if there's an increase or decrease. So from this question, provision is say 5% of debtors. What's 5% of debtors? Debtor here is 350,000. So 5% is 17,500. Now the question is, was there an opening provision? No. That means opening provision is 0. So closing provision here is 17,500. So it has increased from 0 to 17,500. And I told you, where there's an increase in provision for bad debt, it is an expense item. That's why we're putting it here. 17,500. So when you add all, you have 1,830,500. And this 17,500 will reduce your debtor figure at the end of the period. Go back to our provision class to update your knowledge. So total here is 1,830,500. That's what our expenditure. So income minus expenditure is 2,444,500. That's your what? Surplus. So let's go to the balance sheet now. Your balance sheet just shows your what? Your assets and your liabilities. Okay? So what are the assets? We have non-current assets, which is also called your what? Your fixed assets. So what are the fixed assets in the question? We have land and building, 2302. Look at it here. 2,302,000. No depreciation. Remember what the instruction said. Then furniture, with depreciated furniture. Furniture here is 270. Depreciation is what? 27,000. So you have 270 minus 27,000. That's 243,000. Office equipment here is 250,000. So depreciation is 25,000. So 250,000 minus 25 will give 225,000. Motor vehicle from the question is 450,000. Depreciation is 10%, that's 45,000. So 450 minus 45, that's 405. When you add all together, you have 3,175,000. That's what you have here as your non-current assets. 3,175,000. So what are your current assets in the question? We have cash. Cash in the question here is 100,000. We have debtors. Remember, we make provision. So I told you after recognizing an increase in provision as an expense, the provision at the end of the period reduces your debtors. So 350 minus 17,500 will give you 332,500. We have prepaid printing. Additional information. Prepaid printing. That means that printing was paid in advance. So that means the person you paid to is owing the business. That's debtor. So prepaid printing is what is the current asset. That's what you have here. We had accrued subscription. Subscription that is due, but members are yet to pay. It was given to us in the question. You can see it here. First one, subscription due but yet to be paid or yet to be received as at 590,000. So that's the current asset. So when you add all together, you have 109,4,500. That's what you have here, note 4, 109,4,500. So 3,175,000 plus 109,4,500 will give you 4,269,500. That's your total what? Assets. So what are the total liabilities in the question? We have short-term liabilities, no long-term liabilities. So what are short-term liabilities? We have creditors, which is in the question. Creditors here, 130,000. Accrued rent, that's the additional information. Remember, accruals. Accrued expenses are what? Liabilities. They are due, but they are not yet paid, so you're owing the person. So accrued rent here, 55,000 based on additional information. We now have bank overdraft in the trial balance here, 120,000. When you add everything, you have 305,000. That way you have 305,000. So we now have your accumulated fund. I told you it's a function of what? Your fund and your surplus. So the opening fund according to the question is what? 1,520,000. That's what you have here. Then there was the surplus. That is, we made excess. That was more income than expenditure. There was a surplus of 2,445. Look at it here. 2,445. So you bring it here. When you add it together, you have 396 for 500. That's what you have here. Accumulated from note 6, 396 for 500. So when you add 396 for 500 to 305,000, you have 4,269,500, which is your total what? Liabilities, which is equal to your total what? Assets. Basically, in this class, we've been able to illustrate how to prepare income and expenditure accounts and the balance sheet, taking into consideration adjustments on the subscription, adjustment on the expenditures, adjustment on what? Depreciation, and adjustment on what? Provisions. You can as well have questions that come in form of incomplete records. Use the approach I taught you in the class for incomplete record, that single entry and incomplete record. It's the same approach, just that the term is what you should be careful of. Remember, I told you that the terms that we use in non-profit making organization is different from the terms that we use in profit making organization, but the approaches are what? The same. So go through the class. If you have questions, you can reach me on 08136506356 or send me an email, jeremiah.dosu@gmail.com. Drop questions in the comment section. I'll be there to reply you with the right answers. Thank you.